If your job at a healthcare facility includes disinfecting against viruses, you know prevention is the best medicine, and maintaining healthy spaces starts with a healthy cleaning routine. Grainger's world-class supply chain helps ensure you have the quality products you need when you need them, from disinfectants and cleaning supplies to personal protective equipment, so you can help deliver a clean bill of health. Call 1-800-GRAINGER, click Grainger.com, or just stop by. Grainger, for the ones who get it done.
Hello, everyone, and welcome to the Always On Point podcast with Kristen Ambos. Today, you are getting yours truly. We are going to start doing these shorter podcasts to really bring a loan product to you. And so much of what the loan products are have so many details to them, and people want more information. They want more, and they want to understand. And one of the most misunderstood loan programs out there, in my opinion, is the VA loan. And it was really important for me to do the VA loan with you today because, you know, the veterans really utilize this benefit. It is a true benefit to them. And I want to go into the details of it. And I also want to go into the why behind it and why people use it. It has had a bad rap as a loan product for almost my entire career, which is, you know, I'm going into my 24th year career here. And I will say, for a short time, the VA loans back in the, early to mid 2000s was a difficult loan to do. The VA made it difficult. And so people opted to utilize other loan programs. And I would say in the last 10 years, the veteran and the VA itself have really made this program amazing. One of the things I want to clarify right away for all of you is that there is no lender out there that is specifically tied to the VA. You heard that right. So if you're thinking of a mortgage loan company with some kind of a military name in it, that does not mean that they are tied to the VA. That's a big surprise to a lot of people. They are just capitalizing on a name to hopefully encourage more people to go their way. So that's really what it's about. It's a play on a name, marketing purposes more than anything. Every lender who offers VA has the same guidelines as the next lender. Now, some lenders might have what we call overlays, meaning, for example, if you have a lower credit score, a lender may have an overlay where they want to see an extra month or 2 months in reserves to make sure you're going to make your payment, those types of things. But the VA sets the guidelines. And that's it. They have the guidelines, and us as VA lenders have to abide by those guidelines. And those guidelines are really set forth to protect the veteran. And some of those may be, one of the hurdles a VA loan has is, well, the house can't have any chipping paint or broken windows. They have to have railings on all stairwells. They have to have smoke and CO detectors on all levels. There can't be a bad well or septic, and, things to that nature that are really, truly about health and safety. When I sit back and personally think of those things, to me, who doesn't want a house that's got all the health and safety factors that are good for it, right? Who wants to buy a house that doesn't meet health and safety codes? I'm guessing the answer, if you asked anyone, would be no one. No one wants to buy a house that isn't okay health and safety wise. So the things that it's asking for are really not that complicated. Now, if you're going to buy an as-is property that's a complete fixer-upper flip job, you're not using VA. But if you're buying a house that has a little bit of cosmetic updates that it needs, or maybe it does have a little bit of chipping paint. The one thing that so many lenders out there do is they say that they're VA experts when they're not. That is why people have a bad rap on VA right now. And it is not because they're bad lenders in general. They just don't know enough about the VA loan program to be efficient or proficient in it. And then that's where mistakes get had. And that's where loans fall through. One of the things I will say is, well, the comment that comes to me as well, VA doesn't have any down payment, so it's a really risky loan. The truth of the matter is I do a lot of VA. I've always written a lot of VA. I've been very honest and vocal about the fact that my husband and I have a VA loan due to his service. We used his benefit to purchase our home. And while we did use it with no money down, it didn't mean that we had to. We had plenty of money that we had from a house we sold. We chose to invest that money and buy with no money down because it was going to be better financially for us to do it that way. We were lucky we got in when an interest rate was like 2%. So it only made sense to invest our money somewhere else where it was making more than 2% than the interest that we were paying, right? So that's one tactic. The other piece of it is people assume, well, if they're not putting any money down, they don't have any money at all, which again, I'll go back and say is untrue. Work with a lot of veterans who have a lot of money, either in investments or savings of any kind. Again, they're just choosing to use their no money down benefit because they can. 2, VA loans typically have lower interest rates. Why that's important is because it then brings a borrower to either having a less payment per month, which who doesn't want that? And or maybe they could only buy a $220,000 house with conventional, but on VA, they could buy a $250,000, $60,000 or $70,000 house. That now, for the same payment, that now gives them the ability to buy a house that maybe fits their needs better for their family. So why wouldn't they take advantage of that benefit? I always hear the term, well, sellers don't want to entertain a VA offer. And I have to wonder as a lender if the sellers really understand what they're leaving on the table by not entertaining a VA offer, or are they being convinced that a VA loan is harder on them from somebody, whether that be a real estate agent, whether it be their buddy at a bar, I always say the bar stool friend, whether it be another family member that maybe had a bad, rap with the VA from a house they sold, whatever the case may be. I can also debate it with, I've had more VA loans get approved than conventional. I've had more ability to work around an issue in a loan because the loan is VA. And I've been able to put more buyers in homes with VA than I have with conventional when they're up against it. Now, why do I say that? Well, because the VA has a lot looser guidelines when it comes to income limits. They have a lot looser guidelines when it comes to down payment limits, and they also don't have private mortgage insurance. So anyone who's putting less than 20% down, as I'm sure you've heard, is you have to have private mortgage insurance, which is true. That is an insurance that that you pay on behalf of the lenders, because the PMI companies are willing to take the risk on you making your payment every month and the lender's not having to foreclose on you. That's what that insurance is all about. As a veteran, they get a benefit to waive that insurance. They don't have to have PMI. Again, providing them a lower payment or the ability to purchase more of a house with the same payment. So again, a lot of really great flexibility. The other part of that is if I'm getting rid of my PMI, my debt to income ratio actually goes down. Yes, it actually goes down if I'm buying conventionally at a $220,000 purchase price or at a VA at a $220,000 purchase price. I now have no private mortgage insurance, which is always going to mean a lower payment. Now, if you decide, and you can decide as a veteran, to put money down on a home, you don't have to use 0% down. I have veterans that put 20% down on their VA loan all the time. That is absolutely possible. And that's more so to work around a payment that they want, or because they're getting money from a home they're selling and they want a smaller payment because they're on a fixed income so that they can do that. That's totally great. We will work with that as well. The point being is that VA loans have so much flexibility to them. The other piece of this is, let's say the house does have a little bit of chipping paint on it. That doesn't mean that VA won't approve it. If the buyer is willing to waive the chipping paint on the house and by a letter of explanation, and the appraiser is willing to agree to that, now you don't have to have it fixed in order to be financed with VA. It's a caveat and it's a niche that I bet you 90% of lenders have no clue about. The other part where lenders get it really wrong with VA is using service benefits as far as income is concerned, whether that be your BFAS, whether that be your BAS, whether that be your current military income. Maybe it is a VA benefit that you're getting that's non-educational, a disability benefit. Because you get those benefits in, a lot of lenders don't understand that they can actually gross that income up in order to make you qualify. So because I'm using gross income on any pay stub, why shouldn't I be able to use gross income on VA as well? So that's why we're able to gross it up. We can gross VA income up, I think it's 115% without even needing a tax return. That's just another way to be able to qualify for a home that we would be able to on a conventional side, equally to a VA side. Now, with that also being said, the other piece that most lenders get wrong, and this is a crazy piece, but it does happen. A seller can pay for the closing costs and prepaids for a buyer. That's great, right? They can pay all that. They can pay the closing costs. They can pay the prepaids are your tax, escrow, your 1 year of homeowner's insurance, and prepaid interest. They can also pay on top of those closing costs and prepaids up to 4% of a veteran's debt payoff, buying the rate down, anything that is a VA loan to get that VA loan approved. So whatever you're doing, you can pay those closing costs, prepaids, plus up to 4% of debts. So that's a huge benefit to a veteran, which also means you have the ability to save a deal if somebody accidentally purchases a car. Now, I say that jokingly, but you wouldn't believe how many times we have people that are buying a house that are like, oh, surprise, I bought a car. Even though we've told them 10 times not to run their credit, don't buy a car, don't buy, furniture. Or the other good one is, well, I needed appliances. So I went out and purchased the appliances, but it was 0% interest, so it shouldn't matter. No. You pay 0 interest on those appliances, but you borrowed the money, so you still have a payment. Maybe it's $100, maybe it's $500. Either way, that will change our debt to income ratio. So again, where the veteran has VA, or they're using their VA loan, they have the ability to have more leeway on that debt to income ratio. And if worse came to worse, the seller could then help them pay that off with a seller credit of up to 4%, still saving the deal. The point I'm saying is that it is such a flexible loan program. It is amazing. Now, last but not least, the VA IRRRL. If you've never heard of a VA IRRRL, it's a VA interest rate reduction loan. That's what IRRRL stands for. We're in the business of acronyms. This is no different. So VA, Veterans Administration, IRRRL, interest rate reduction loan. This gives the veteran an opportunity to refinance their loan without an appraisal, without having to approve income. It's simply an interest rate reduction. We rewrite the loan and we rewrite the interest, and we now have a new payment and interest for the life of the loan for that veteran. The VA will allow them to entertain that every 180 days. So why I say this is because refinances might start to spring up. Rates are starting to fall. With that being said, the VA interest rate reduction loan is one of the easiest loan programs to do. So lenders come out ferocious on this because they don't have to do much work and they get paid on it. The likelihood of them knowing what they're doing, as well as offering the best interest rate, is really, I have a lot of skepticism around them because I've seen a lot of loan estimates where that loan officer is not still giving that veteran the best option, because in 6 more months, they'll just refinance them again. And in 6 more months, they'll refinance them again instead of giving them the best option now. So my point to that is not only is the veteran loan, VA loan, a benefit to the veteran that they should be able to use, it does have much more flexibility in the loan program, as well as a benefit to refinance with fewer costs and less of a headache. So for you listening out there, if you are a seller, please take a second consideration on accepting a VA offer. Now, if you have 10 offers up against it and that offer that's got the VA loan is the worst offer out there, okay, I understand that. However, if it's a really strong offer and you do believe that you would take that one, but you're being told don't take a VA loan, I would love to change your mind on that, give me a call and let me explain to you why the VA loan is probably a good option for you to take. And if you ask your listing agent why the VA loan isn't great and all they can tell you is because of chipping paint, smoke detectors, and handrails, let me tell you why and debate why it should be so much better. There's a lot of veteran agents out there who just simply don't understand the loan program. And it's okay. It's not for them to understand. They're realtors. We're the loan officers. But again, I'm just really pleading for this because our veterans deserve this benefit and our veterans have worked hard for it. And it truly is a very misunderstood loan program. So I hope you all enjoyed learning a little bit more on VA today. If you have any questions, I would love to earn your business and I would love to walk through with you any opportunity I can on doing an apples to apples comparison of VA versus conventional and why it may be good for you if you qualify. So again, thank you so much for listening. If you have a friend out there or a veteran that you know that could use this podcast, or even a seller who could use this podcast to really listen to why they should look at all offers on the table, regardless of financing, I would love for you to share this with them. If you like it. If you don't, just don't say anything. And I'm just kidding. I'd love to hear the reason why, because I'm one of those people that's always open to constructive criticism. And as well as I'm just so grateful you're here sharing your time with us and want to make sure we're bringing the best we can possibly bring to you on a weekly basis. So as always, thank you for taking your time listening to the Always On Point podcast with Kristen Ambos. It's always a pleasure, and we look forward to seeing you on the next one.